Octopus Renewables Infrastructure Trust, or Orit, is an investment trust that we IPO'd back in December 2019. And our ambition is and has been to go and build and operate the next generation of renewable energy assets and help accelerate the energy transition.
So generation has increased year on year to over 1,300 gigawatt hours, and that's led to corresponding increases in the revenue and EBITDA that comes from the underlying portfolio of assets. So a 5% year on year growth in the underlying revenue. And that's allowed Orit to deliver another consecutive year of dividend growth, paying out the on-target dividend of 6.17 pence per share, and that dividend was 1.14 times covered by the underlying asset cash flows after all of the debt service, including principal repayments. 2025 has been a challenging period for the entire listed renewables sector, and that's led to NAV total return in the period of minus 2.8%. But looking beneath that, there's been some real progress in Orit's portfolio. The level of gearing has remained roughly constant during the year at around 45%. However, that doesn't mean that the amount of debt hasn't changed. We've actually reduced the amount of the company's borrowings by over £50 million during the year. They now stand at just over £400 million. And that reflects the proceeds of the asset sales that we completed in the year being used to pay down both a portion of the company's revolving credit facility and also some of its longer term facilities at the asset level. We've also been successful in reducing the cost of debt during the year. We completed a £100 million refinancing earlier in the year that brought the cost of debt down to well below 4%. Underlying operational generation increased year on year to over 1,300 gigawatt hours. That was driven primarily by a significant increase in the amount of solar generation, so an 18% increase year on year, as the Irish assets completed a full year of generation for the first time. And that reflected also significantly higher irradiance than budgeted in the UK and Ireland, somewhat offset by the impact of grid curtailment in Ireland. On the wind side of things, performance was below budget as we saw another year of lower than expected wind speeds. However, adjusting for weather effects, year on year performance across the wind portfolio improved significantly. In 2025, Orit's asset management team have launched a concerted value enhancement programme across all of the operational assets, looking to maximise operational performance, as well as longer-term opportunities for hybridisation, which might include adding battery storage sites to existing solar farms, for example, as well as longer-term repowering opportunities as assets reach the end of their subsidy lives in the early 2030s.
So during the period, we made 3 disposals from the portfolio, 2 developers and also a portfolio of assets. So we've exited our investment in Hyro, which was the hydrogen development platform. We think hydrogen is just going to take that little bit longer to fully commercialise. The timing around that investment was probably not the right thing for Orit to maintain. So we exited that one at NAV. We also exited a portion of our investment in Simply Blue Energy, which is our floating offshore wind developer. They've had some great success over the course of the past year. They've managed to win one of 2 CFDs for one of their floating offshore wind projects, and that's going to need a huge amount of capital to go and construct. So Simply Blue have gone and formed a partnership with a company called Kansai Electric, who can bring that balance sheet and help take that project and the company to the next stage. We continue to maintain a stake in it, but we're super excited to have formed that partnership with Kansai to see Simply Blue move on to the next stage of their growth. And then finally, over Christmas, we exited 2 projects. One was the Cross Dykes Wind Farm, our 51% stake in that, and our 49% stake in the Breach solar farm, which we'd recently completed.
Orit 2030 is a strategy that was launched in September of 2025, and so it's still early days in that strategy. Really, the strategy isn't a dramatic shift, but reflects a return to the principles that was set out at the time of Orit's IPO. And that is a focus on delivering more than just the attractive level of income, but also delivering investments that can offer capital growth to investors. And Orit 2030 pivots to a renewed focus on those growth investments. And that particularly means investing into assets at the construction stage and delivering the growth that comes with that. We've also set out with Orit 2030 the ambition to scale Orit to be a £1 billion plus company by the end of 2030. And in doing that, we believe we can offer investors an attractive level of overall return, and we're targeting 9 to 11%. And with all of that, we also deliver continued positive impact, bringing new generation capacity onto the networks, allowing customers to benefit from cleaner, more affordable, more secure energy supply. During 2025, a buyback programme of 30 million was announced, and around £26 million of that programme have been completed by year end, delivering NAV per share accretion. Buybacks are not the focus of Orit 2030, given that we're looking to invest in opportunities that can deliver more sustainable growth over the medium to long term. However, they will always remain a tool open to the board to use if they feel that is the most appropriate use of investors' capital.
Well, look, we've seen a lot of kind of negative political rhetoric about renewables lately, but in our view, that's not really been our experience on the ground itself. Most of the markets where we've been operating, we've been seeing the local governments or government support the rollout of new renewables in many of the markets where we operate. So we are seeing probably as many investable megawatts as I've seen in probably 20 years at this point.
We think Orit 2030 is the right strategy in order to capture that growth for investors. And with what we've done in 2025, we've set Orit's portfolio up in order to be able to deliver that strategy. We have a highly contracted revenue base with over 88% of revenues fixed price in nature over the next 2 years. And we have an attractive pipeline of growth opportunities, both from Octopus Energy Generation's wider origination, as well as developers within Orit itself, where we have the right to build those assets as they come through to being ready to build over the next year or two.